progress and improvement of capitalism and democracy in the world into which economics was born. An advanced theory for economic progress was found. In advanced countries, increased production is an alternative to distribution. It has been the great solvent of the tensions associated with inequality, and it has become the remedy for the discomfort, anxiety, and privation associated with economic insecurity. No other question in economic policy is ever so important as the effect of a measure on the distribution of income. The greatest source of insecurity lay in competition and the free and unpredictable movement of competitive market prices. Supply and demand are one of the most fundamental concepts of economics, and it is the backbone of a market economy. Demand refers to how much of product or services are desired by buyers. Supply represents how much the market can offer. The relationship between demand and supply underlies the forces behind the allocation of resources. In market economy theories, demand and supply theory will allocate resources in the most effective way possible. In a competitive market, price will function to equalize the quantity demanded by consumers and the quantity supplied by producers, resulting in an economic equilibrium of price and quality. The basis of a simple market is easy to understand. Taking into account the demand and supply are both defined and permanent under non-manipulated conditions. With prices of products and services by companies, everything is clear. They are taking into account the demand and the market, and in accordance with this, they put on the market a definite quantity of products and define the price, which provides reimbursement of socially, economically necessary expenditure of production and to obtain profits, providing subsequent development of products and gives an incentive to stimulate good results. A different situation is established in the future markets of commodities. The future markets of commodities is the price setter, and speculative dollars are driving up the price of future contracts and the commodities itself. This can be clearly demonstrated by the example of crude oil. We have a few huge companies competing with national governments in acquiring oil for processing. There are huge barriers for entry. then they all fix the price in harmony. How is that a free market of any sense? It is a product that should be heavily regulated by any reasonable measures. There is too much market power in too few hands on a product that is almost a necessity in the modern world. In addition to this, the traders play not an insignificant role of misrepresenting the demand and correspondingly on the level of prices, using their predatory interest, artificially raising the demand. They influence the increase of prices, doubling and spreading up the inflation process. The influx of their capital in the future markets of commodities drives up these prices. The observation of lately shows that just speculation draws the price of crude oil to a record high of $145 a barrel. This price is 2 times higher than last year. What happened? The demand for oil increased 2 times, or the supply decreased accordingly. Neither one nor the other took place. If one is buying oil future as an investment commodity play, then 75% oil futures capital gain tax will hurt no one, but will eliminate speculators of this vehicle. This will improve the situation with the defects of the capitalistic system, which has been increasingly robbing our population of its benefits. This defect of capitalism is now threatening its existence since inflation strikes the economy at a point where it is the most vulnerable. Corporate America is the best example of an economic system in the world. United States America has a high rate of new business starts. It breeds a constant flow of new high-impact firms, the kind that create value and stimulate growth by bringing new ideas to the market, be it new technologies, new business methods, or simply new or better ways of performing routine tasks. To maintain the rate of growth of production, there is a need for additional investment of capital. The invention of the contemporary economy is to issue public companies stock to accumulate large funds necessary for investment in developing new products and the expansion of existing ones. This creation is since altered the economic system of the USA into people's capitalism. By investing their savings and pension funds in stocks, working people expect to get a share of corporate profits in addition to their earnings. it is reasonable that such profits go hand in hand with some risk of failure within a few companies. Besides, they help corporations fulfill their needs for a constant increase of production. These stock prices need to reflect the results of the public company's activities and fluctuate within the boundaries of collected profits or losses for every issued stock. As a result, the price of a stock becomes a derivative of fluctuating profits. Over the long term, stock prices rise in line with earnings per share. The profit or losses of companies reflects a complete and final result of their activities, taking into consideration the quality and quantity of production, its sales, productivity, cost, price, and other economic, political, and social changes for a corresponding period. Therefore, it is unacceptable that the daily abrupt, not well-founded ups and downs can scare away investors from buying stocks. Stocks are not goods, but valuable papers, which reflect the accumulation of profits on a definite date. The price of a stock should be determined by the public companies by means of bookkeeping calculations, by adding the profit of a given quarter divided by the amount of shares to the price of the stock from the time when the stock was issued. For example, initially public offering. Thus, not the stock market, but the corporation set up the price of their stocks and bear the full responsibility of their substantiation. The massive transformation in information technology allows the reorganization of the stock market by carrying out all operations by a central firm. The full job will be done by computers. By pressing the button on the computer, the investor will be able to buy or sell stocks for prices set up by the corporation at present time. This will put the full responsibility on the corporations for rational movement of their stock in the market. One would think that such organization of the stock market satisfies the requirements of capital investment. In reality, the stock market operates on an order established 200 years ago. For example, the price of a stock is what somebody is ready to pay for it. This way, the traders or speculators enrich themselves on the stock market on the account of volatile movements of stock prices They make money when the prices go up and down by means of increased frequency of buys and sells. The investment business is a giant scam. It delays billions of dollars every year in transaction costs. All they want is trade, trade, trade. They artificially violate the balance of supply and demand so they can make millions of dollars enriching themselves on the backbone of ordinary investors. For the average investor, this is certainly a scam. They know that big investors manipulate the market. If the existing order satisfies the requirements of the public, then those who instead of investing are engaged in buying and selling stocks, then a 75% tax on the profits from trading stocks with capital gains will hurt no one, but will force out speculators of this vehicle too. Market forces can accomplish wonderful things, but cannot ensure a distribution of income that enables all citizens to meet basic economic needs. The instability introduced by volatile financial markets threatens the normative foundation of the open society. We need definite changes to reach stability in the market. It seems to us that the proposed changes in the order of working future commodities in the stock market can help with a more just distribution of income in the society. And so, a modern society which is in a position to arrange a constant increase of production, satisfies the private and public requirements of the population, is able to sustain a constant rise of living standards, could seek elimination of economic insecurity. Such a progressive economic model, a new phase of capitalism, could be adopted in other countries as well.